What's going on, Money Morning Live? That was a fun time with Nick and Brandon, wasn't it? Do you have cannons or do you have pews? I have a cannon myself, 2 of them. But let's bring in Tom. He's coming in 5, 4, 3, 2.
Hey, everybody, Tom Gentile. What's up? Power Profit Traders, glad to have you here. This is our Operation Surge Strike Edition, Tuesday, February 15, 2022. What are we going to do in the next hour? Well, we got to talk about volatility. We got to talk about what happened last night, all right? While many of us were sleeping, I saw gold jump up, level off, and then come screaming back down after the reports that Russia is pulling back a little bit. So we'll talk about that too. We're going to take a look at volatility. I want to talk about a couple stocks that we're watching right now and what we call trigger events. That's going to be looking at Brutus, the Brutus software, which helps me find, spot, and even trade these volatility trigger events. I want to look at your charts. All right, so get in there in the chat and give me your favorite stock. It's all about stocks today. And of course, before we get into our individual stocks, let's do a market update. And you know, big thing happened with Bitcoin too, so we need to talk about that for just a moment as well. So let's go ahead, Eric, and let's just start with the overview.
Let's get into it. Yeah, for sure.
So, hey, before we do, how was your Valentine's Day evening?
My Valentine's Day was nice, thank you. How was yours? Was the wife happy?
Did you get out?
No, we had to bring in. We couldn't go out. You know, I don't live by family. I got 2 young kids. Babysitters aren't very easy to grab on Valentine's Day, but it was a nice night. Thank you.
Yeah.
You?
Good. We went to a little place called Georgie's.
Mm-hmm.
It was fun. Had a great time, my wife and I. I mean, it was funny because we left the house and there was just all this chatter that was going on. You know, my mother-in-law chatting about this. My brother-in-law was over. He was chatting about something. All the kids had their friends over too. And it was just this nonstop. I heard noise. I didn't hear any one individual thing. I look at my wife. She looks at me. She goes, "Let's go." Nobody's even going to know we're gone. And that's exactly what happened.
Slip out the back door. Glad you had a good time.
Yeah, we did. It was a great time. So,
Awesome.
All right. So it looks like it's a great time for the stock market if you happen to have slept through the night and not seen what happened to the market, because it was down last night, but had a complete reversal. Literally, one sentence changed everything. All right. And that was Putin saying, "Yeah, maybe we'll pull back after exercise." All right. Maybe we'll pull back a few tanks. And so that changed the narrative last night. And we're going to take a look at everything right now. Let's start with the S&P 500. And what I'm looking at here, everyone, is just 30-day charts today. Okay. 30-day charts. We're going to go back and look at the from January, the first trading day of January, to where we are right now. So even though we got a little gap this morning, all right, little gap up from yesterday's low, we're still down on the year, Eric. I mean, we started the year out up here at 480 on the S&P, and we dropped all the way down into the 425, 430 range. But the big resistance point right now is not the highs of January. It is really the highs of February. You take a look at the February 2nd, we clocked in right there around 457, and again on February 11th. And so you got all this resistance sitting right up here. Volatility's dropping for today. That's good. But over the long haul, we got a long way to go to get back to the higher highs and higher lows that we were seeing coming into the end of last year. That's SPY. All right, let's move on. Bond market still hanging out down here and making new lows. I mean, we were down here not that long ago, and here we are the day after Valentine's Day. New, fresh new low. Not a lot of movement in the bonds. Bonds are kind of thinking, all right, if we're not going to talk about Russia, let's get back to inflation and let's get back to all these interest rate hikes that we as bond traders believe are going to happen. That's what's going on right now with TLT. USO, it did get a pullback. That was expected because guess what? When we have this, let's call it conflict that's happening in the East, all right? When you have this conflict that's happening, that's bullish for oil, gasoline, and of course gold. And look what happened once we had a little bit of a pressure come off what's happening in Ukraine. And you see the oil market went from yesterday, we were trading around 66.5 as high as near 67. And today we're now down below 64, trading 63.72. This is expected. I expect that we're going to see some pullback in crude if this continues. All right. I can't imagine Putin rushing into Ukraine while we're still in the middle of the Olympics. I mean, the whole world stage is looking at the world. And, obviously all the good and all the excitement of the Olympics. And then you got this guy over here in Russia trying to invade Ukraine. I imagine if he's going to do it, maybe he's going to wait till after the Olympic Games are over. So we see a pullback in oil. Gold, same thing. You had highs yesterday in gold. We hit 175 yesterday in GLD. Today, we're trading near the lows of the day, off about 2.5 points. That's about 1%, trading at 172.5. One of our financial advisors, all right, good friend of mine, texted me this morning. He says, "Hey, do you still like gold?" Because he knows I've liked gold for a while, and especially the last couple of weeks, as we've seen it go from the 160s to the 170s. And I said, not today, but long-term, yes, I absolutely still like GLD. And that's part of my long-term portfolio. Here's volatility in one word. Look at the VIX. All right. So this is the beginning of the year when we were trading down at 18. We had a bump up to 28 and a massive pullback into the beginning of February. Then we had yesterday's bump up that got us to 25. I thought last week, this was before all the news of Russia being potentially real, all right, invading Ukraine. I really believe that we were going to see this pushback down to 18. We got as low as 18 and change last week, but rushing back in came volatility. Are we going to rush back out? Again, time will tell. I believe we're getting some steam that's going to come off of volatility, but still elevated levels on the VIX. And this chart, which is the VXX, this is the volatility futures ETF. All right. We could get into FANG stocks, but I think we covered a lot. We've covered a lot of that in weeks. Those earnings are now behind us for all the FANG stocks. I mean, if I were to take a quick peek at just a few, Eric, I would say, if you want to take a look at, and we could scan them real quick for the year. All right. So, taking a look at, for instance, let's take a look at Facebook. All right. So I'm going to pop over and take a quick scan at Facebook. You know what? We'll come back to Facebook. I don't know why I'm not getting a movement on. There it is. Okay. Here's Facebook down in the dumps. I mean, again, today, you got a stock market right now, folks, where, as of this broadcast right now, we have the Dow up over 400 points. We've got the NASDAQ up over 2%, so nearly 300 points. And yet, where's Facebook? $217.89. Where does that put Facebook today? It's actually down, while the entire rest of the market is higher. If you take a look at what's happened just in the last week and a half with Facebook, this really reeks of us going to 200. And I think 200 is a round number support. We haven't seen 200 in quite some time. And that's where really Facebook looks like it wants to go. It's hitting support 1, 2, 3, 4 times. It goes through this, and we are technically going lower. All right, so that's Facebook. The other one I want to talk about was Amazon, AMZN. And if you take a look at AMZN, you're going to see that Amazon, I believe Amazon is one of those value plays where, we got down to 2,800, big value, pop up, come down. We were actually back down nearing 3,000 again just yesterday before the move we had today. Now, look what's happened today. Open higher, and we're actually trading lower. So we could fill that gap. But I think long-term, this looks really good. Those blue trucks, they just keep on rolling. Last thing I want to talk about here in our overview as we move forward, take a look at Bitcoin. So this is the beginning. Actually, this is the end of January. We saw that drop all the way down to the 33,000 level. In fact, we were down here below 33,000, 32.9-ish. And then from there, we started having the run up. Big move on February 4th. As we opened that day at around the 37,000 mark, and then we ended it up above 40,000. From there, 40,000 has been a really good, or excuse me, 41,000 has been a really good area of support. As you can see, the last 3 days, we stayed above the 41,000 mark. And today, here we are, 44,128, up about 3.25%. Is this the move? We're going back up to potentially the highs that we saw of just last week. All right, after that, we'll be gunning for new highs for the year. Now, in order to get to new highs for the year, we've got to get above 48,000. You all, if you were here yesterday, you saw my marks on where we are likely to go. Obviously, 48 is going to happen before 50, is going to happen before 51, 51 and change, which was my Fibonacci retracement levels. But all of those are key resistance areas. So there you go with Bitcoin. All right, guys. So, I mean, to summarize this, the VIX was up again starting the week. We did break 30 on Monday, but after Valentine's Day, and of course, after last night, we've seen a little bit of a pullback. Now, all that being said, when we take a look at the stock market today, it doesn't really reflect what's been going on for the year. The year is still mixed. The year is still mostly down, right? A couple headlines that were out that are obviously huge for the market. James Bullard, he's never been more powerful than he is now, okay? And, of course, we still have a few earnings reports that are going to move these individual stocks. So, Eric, what do you say? You want to jump into some earnings?
I was going to say the exact same thing. It's time to get into those earnings and take us through them on your charts, I'm assuming.
Yeah, so let's do a couple of things here first, all right? So I've got a bunch of earnings coming out today. Now, we can all look at earnings from several different viewpoints. Here's the first viewpoint I'm going to give you. It's the one where I'm taking a look at all of the S&P 500 stocks. As you can see here, S&P 500 optionable. And I'm just looking, the first thing I'm looking at is where are, what do we got coming out today for earnings? We got a bunch, right? But when you look along this area here, Devon Energy is one that excites me. Wynn Resorts is one that excites me. If I come on down, Viacom is on here as well. Applied Materials, that's tomorrow. But here's a couple of them that look very interesting. We talked about 3 different earnings. Guess what, folks? These are not the 3 I want to discuss. This is the viewpoint that everybody else looks at. They look at all the earnings that are out there. And if anybody ever comes to the table and decides, I want to be an earnings trader, this is typically what they do first. They look at reports that are coming out right now, and they say to themselves, if oil is up, I think Devon Energy is going to be up. Therefore, I'm going to buy the stock. Or, hey, here's a great idea. I'm going to buy calls because they're cheaper than owning the stock. That's the wrong way to look at earnings, right? It most certainly is. Take a look at Wynn Casino. You might be thinking, well, Wynn casinos, there's potentially, with the restrictions being lifted and earnings are coming out, this could possibly make Wynn casinos go higher. Take a look at that chart of Wynn. We got earnings coming out today, and look what Wynn's been doing. I mean, we were down here at 80 back at the end of the year, and then again just last month. And of course, we've ran up to 80 to about 95 on the chart. You can see right there that 95 is telling us that, we're running into some resistance. Maybe not the best time in the world to be buying a stock as it's gone from 80 to 95 right before earnings. Sounds to me like the time to have been buying Wynn was a week or 2 ago as we were heading into earnings. And then finally, look at Viacom. So let's take a look at the picture of Viacom. It's not down in the dumps like some stocks before earnings, but it's not racing to the moon like others. We saw Viacom trading above the price tag that it is right now before earnings. Last time we had earnings with Viacom, we saw a drop, and that potential is certainly there. But do you want to buy puts ahead of an earnings cycle when implied volatility is high? And how do we know IV is high? Well, we could look at IV on a lot of these stocks, all right? And it's just a matter of, if I'm going to take a look at Viacom, I can come out here and just take a look at even just maybe the 35 puts, all right? So if I were looking at the 35 puts real quickly, Now, I'm not suggesting to buy these. What I'm doing is I'm suggesting that you look down here, okay? These are the charts right here everybody else is interested in. Oh, the stock price, and what if I buy the put if I'm bearish? What if I buy the call if I'm bullish? But down here, this is the interesting chart. This is option volatility here, all right? Equated into chart format. And what this tells me is, if you take a look down here in the beginning of January, and then you look where we are now, just in the last 6 weeks, we've seen option premiums increase more than 50%. That means you're paying 50% more today than you were just at the beginning of the year. That's inflation. That's inflation in option prices. And unlike inflation in the economy, where we can't fit, a lot of times we can't figure out when something's going to be higher or lower when it comes to gas or food, et cetera. These things happen, all right? With the stock market, we could take a look, and about once a quarter, there are certain stocks that get inflated in option prices only to deflate after earnings. So that's the first view we can look at, Eric. The second view I want to look at is the way that we look at earnings as Operation Surge Strike members. So what we do is we look to either take what I like to call getting in before the tide, all right, or after the tide. And so the before tide move, all right, trading before the tide means we're going to get in before everybody knows what's happening. It's kind of like Super Bowl tickets. Eric, I heard that the average cost of a Super Bowl ticket was $10,000 at the game at SoFi Stadium. And there were people paying in excess of $100,000 for the good seats. And
That's crazy.
I know, you look at this and you think, okay, wait a second. The ticket value on Super Bowl games, if I'm not mistaken, is somewhere around $250 a seat, maybe $1,000 a seat. So you're talking about people that were able to actually get the tickets before they even know who was playing. I mean, that's a gamble right there, depending on who actually is in it. And honestly, I took a look at these two teams, the Bengals and the Rams, and I thought, this isn't going to be a pricey event. Boy, was I wrong. I mean, you know what? My career as pricing Super Bowl tickets in demand is totally thrown out the window.
Hey, at least it was a good game for $100,000 for one of the good seats. At least they got a good game out of it. But man, that's crazy.
It was, but you know who really made out good? That scalper. The scalper that had those tickets and was able to flip those. And, part of the reason why someone's willing to pony up $10,000 to $100,000 for a ticket is YOLO. Okay. You only live once. A lot of people think, all right, I'm going to take my bonus money and all my money I've been saving and can't take it with me. So I'm going to go to the Super Bowl, have a great time with my spouse or significant other. And then there's people who just want to be seen in the crowd. They want to mix it up. They want to say, I was there with Jay-Z, and I was there with Ben and Jennifer and the rest of the crowd. All right. And there's people that just like to throw big money down. But the smart people were the ones that had the seats and then offered them up for sale right before the event began. All right. Maybe even days before. I saw 2 Super Bowl tickets going days before the event. And I saw them going for a pair for $50,000. Will call. You had to go and pick them up at the counter. But here's the thing. The folks that bought them for 10 and sold them for 50, the folks that bought for 5,000 and sold for 10, these folks were trading the same way. Those tickets, they were trading those tickets the same way Brutus goes out and finds option trades on stocks, right? Looking at that volatility, looking at that event that's coming up. And the event that I'm talking about was the Super Bowl. Now, when was the worst time to sell your tickets? The worst time was just after the halftime show because, that a lot of people went to see the halftime show. I think I think seeing the halftime show from my flat screen TV was better than any view I think anyone would have gotten being at the game. So if you were there for the halftime show, you blew a lot of money. But again, some people made out really well. We use that same philosophy right here with trigger events. So the Super Bowl was a trigger event. We identify trigger events in the stock market. It's anything that launches traders into a frenzy, a speculative frenzy, okay? And it creates what we call a tradable surge. So What creates tradable surges? There's nothing like a good earnings report that can create that tradable surge, that speculative frenzy. And what we do is we take all of this data, and from that data, we create what's called an initiation point. And the initiation point, what Brutus does is it goes back in time and it looks at several different earnings cycles. And it sees, when did this surge actually begin? And it optimizes that over several earnings cycles, right? So that initiation point is the point we get into, but it also tells us how far in advance that trigger point is likely to occur with the surge. Now, we try to get in right before that. Now, again, it tells us how and when and where to position our trade, and it gets us in ahead of that wave. Now, the second piece that Brutus does is what's called the magnitude. Gives us an idea of how much that wave is going to be, okay? And sometimes they're little, and they don't give us a lot. So they may not be worth our time. I mean, think about the thousands of earnings announcements, trigger events that happen. Okay, we don't have thousands of trades. We sift through and pick only the best ones that have initiation points. Obviously, they all do. They all have some initiation point from one point to another. But then you're wiping off from thousands of events. We wipe off at least 90 to 95% of those right off the bat, because that magnitude is just not worth our time. And then finally, we look for that ending, that termination point. It tells us when the surge is going to end, tells us when we need to be out. Right? This strategy has been working incredibly well so far this year. And, I've got a couple of them I want to share with you, but I want to show everyone a little bit more of some Brutus. We're going to go back in time. We're going to look at Brutus right now. So I have on my screen, I have a couple trades I want to show you. Okay. These are some Brutus events. And then I want to talk about three stocks that we've talked about in the past that are looking very interesting with Brutus right now. One of them's here. One of them I have to talk about today, but take a look at this. So what Brutus does, I just want to show you some of the data that goes behind this. All right. So what Brutus identified with Hilton was 7 days before its earnings event, we were spotting a bullish opportunity. And the bullish opportunity we found was buying call options, because about the week before earnings with Hilton, these call options tend to have gone up in value. Now, let me show you what I'm talking about. I'm going to start down here at the bottom and work my way up. So last year, a week before earnings, Brutus identified this 110 strike, okay, the 110 call option, bought it, all right, on the 10th of February, sold it on the 19th of February, bought it for $267, sold it for $4.60. That was a 71% return. Okay, fast forward to April. That's the next earnings report. And you can see, bought it on May 4th, sold it on May 21st. Bought it for $307, sold it for $375. Okay, I'm sorry, bought for $375, sold it for $307. Loss, but a small loss, 18%. All right, fast forward to July. You have Brutus saying the 125 calls look very interesting, buying them on the 22nd, selling them on the 28th. That $3.50 entry initiation point became a $7.55 termination point, 115% return. And then this was last quarter, all right? So we're looking at buying October 20th, selling October 26th, buying and selling the 140 calls. Well, the initiation point, they were $4.75. The termination point, they were $7.10. That was nearly a 50% return. Okay. Now, this is all set up for Hilton, which the initiation point was last week. I want to share this with you because it's important to understand what happened. So, taking all of this data and looking at a call option, let's go ahead and fast forward and look at what was going on with Hilton. So, this is Hilton today, but I want to take us back a week ago. So let's go back to the 8th of February. Here's Hilton, February 8th, when the initiation point started. And it actually started not at the open of that day, but it started near the close. So, it's not like you got in at the better price. You got in at the worst price, right? So how did this do? Again, what we look at doing is we take a look at this this particular trade, and I'm going to go into options and option chains right now. So we're going to look at Hilton options. Now, we can look at the February 18th. They expire in 10 days. Now, remember, this was a week ago, so these make sense. All right, so the Feb 18 what? Let's go look and see what we've got available to us. The February 18th 150 calls were $6.30. The February 18th 155s were $3.55. Let's just look at the February 18th 155 calls. Couple things I want to point out to you here. They're trading at $3.55. Now, the other thing that's interesting is that if you see over here, you see this line right here? That's your implied volatility. The IV for that trade was at $42.31 or 42.31. Now, let's take this forward. I'm going to put this in and force a trade. And you can see here's Hilton and here's Hilton Worldwide and how much we're paying for the trade, $3.55. This was last week on the 8th. How did it do? Let's go forward a day. First day, well, it's down 30 bucks. As you can see, our $355 position is down $30. That's 8.5% on the trade. Let's take it forward another day. So now we're going to move out to the 10th. Now we're actually flip-flopped and we've got a $25 or 7% return to the upside. Okay, let's do it again. Look at the 11th. Now we're down 145. So Hilton's moving back and forth, but there's one thing that's moving higher, and I have yet to point that out. That is the implied volatility, which was in the low 40s, is now in the low 50s. And IV is going to start to take over. And as we get to now Valentine's Day, we're at that 100. And then, of course, here we are today. Look at what's happened. Volatility had a extreme move to the upside. Now it's trading at 64. Volatility is up nearly 50% from where it was when this trade was initiated. So volatility, price moved up and down. Price isn't that much higher than it was at the beginning. But look what volatility's done to the trade. Volatility kicked in, and now our $355 position has $195 of profit in it. Let's take a look one more time and look at this. This is a 155 call. This now bid 530 by 570. And more importantly, look right here. Next earnings, 1 day. So the earnings are estimated to come out tomorrow before market open. So what does Brutus tell us as far as a termination point? Termination point is today by the close. All right. Today by the close, we're going to get the most amount of surge. We're going to get the most amount of volatility. And it's time to get out of that and flip that Super Bowl ticket to somebody who's begging us for it. And this particular event is we're flipping these tickets to that person that wants to drive this through earnings. Let them take the risk. We'll take the profit that we've got so far. All right, Eric, there were 3 stocks that we were talking about last week. And let's go ahead and look at those. So I'm going to pop back over to my stock charts. And the first one I want to talk about is John Deere. We mentioned John Deere last week. All right. Now, John Deere, we were talking about as well. And I want you just to pay attention to what's happened just in the last week. We've seen John Deere down here around the 375 level. Look what happened. It's popped up. Now it's 20 points higher. That's a big move. You want to know what else is higher? Look at that IV. Went from a 36 to a 40, 47, 48. Nice little surge that's happening right there before your eyes. Brutus found it. You know, Brutus said, I did that. Okay, let's take a look at Cbre. And I'm showing you all 3 of them we discussed. So this one reports Friday before market open. Now let's take a look at Cbre. This is a real estate company. And again, what's the theme? The theme is the surge. Is the surge in price? No. The surge is in volatility. It was that option premium, which was below 30 last week and jumped up to 46. Okay? So that's the second piece. And then the third stock we were talking about, and I want to serve it up for you a little bit closer here, is Newmont Mining. Now, Newmont Mining had a lot of movement here in the last week. It went down, it went up, it went up. It's down a little bit today, but it's coming back. But you can see the surge went from the low 30s to around 40. Now, again, Newmont Mining isn't happening for about 9 days. I said put it on the radar. And in a couple of days, we're going to be looking at this one much more intensely as it and CBRE report earnings on the 24th. So those are the ones that we're looking at as potential in plays. Let me share one of them with you real quick. So I want to go back and I want to take a look at SurgeStrike, because here is the calendar for Newmont Mining. Newmont Mining, believe it or not, this one is showing up as a potential put piece. So, and how well did it do? Well, last year, Brutus found a 40% winner buying puts. And then the next quarter, it was up 26%. And the next quarter up 166%. And last quarter, that was buying the 57 puts on the 21st and selling on the 27th. That was one that did not work out because gold was actually in its seasonality. But again, another 3 out of 4. So that's how we look at these, Eric. We don't run out there and just buy something going through earnings. We don't, throw darts at a wall on these. We don't think. We are rules-based traders. The rules we use here is we're looking more importantly at the volatility and trying to grab that volatility before it starts to run, right? Those of you that are in Operation SurgeStrike, you know exactly what I'm talking about. We had a fantastic January. February, we've got tons of trades going on too. The season is starting to close on us. We will have trades in Operation SurgeStrike. It's just not going to be a feast of trades like we've seen. But guess what's coming around the bend? In about, we'll start getting trades on average about once or twice a week. But then we get to deal with the next earnings cycle, and we get to do it all over again. So, Eric, what do you think?
I think that's good. I like that you have these tools that you really don't have to do so much thinking. You let the tools, you let Brutus kind of work for you, and you just take action where it has to happen. Now, you mentioned your SurgeStrike room. We're going to be back there again today. That's going to be dropping around 1 o'clock. And I believe you have a special guest coming on as well that's going to be there kind of breaking all this down for people, teaching everyone how to get through it, how to understand what's going on. It's always a nice session. Questions are always taken. So if you guys want to be part of that little family we have back there, numbers on the screen, you can come on through and hang out in the back rooms, as people like to call them. Get some extra learning on.
Let me remind, there's we typically every week when I do this, we get folks out there that say, how can I be a part of this? Right. I don't know how to trade earnings the way you do. All right. Well, there's a link that we've made available for you for those of you that want to join us. And, we have, guys, over $11 million in surges up for grabs every day, every second of every day. And so, here, if I were to go through and kind of show you something that I think is fantastic about SurgeStrike is we actually teach you how this strategy works. We're not just going to throw trades at you, entries and exits. It's to me, this is a research service, first and foremost, research and education. I want to show you how we find these, how we put these on, and really educate you on what I like to call the road less traveled. All right. The way that to trade these in an unemotional, rules-based, almost like robotic format. And to find, to me, this is my opinion, but I think it's a good one, is that I found that when I got rid of the emotion in my trading, and all I did was become like a worker bee, when I have things that spot rules, and I just put them on and take them off based on my rules, I found that overall, I had a much better return on investment. I had a much better consistent return in my accounts. And that's exactly what we do here. So we talk about the rules based that we do, the alerts that we do, the video training series that comes with this. If you're new to SurgeStrikes, and we do two different types of SurgeStrikes. We do the before SurgeStrike and we do the after SurgeStrike. So today I'm talking about before surges. Tomorrow I'm going to show you, for those of you that are new with us, how we pick apart trades that are going through earnings, all right, like Meta /Facebook, because that one was a very interesting one as well. So we'll talk about that. We give you the briefings every week. We do at 1 o'clock every single Tuesday here. We get into strategy sessions with our members, and we talk about the trades that we have put on. We talk about our closed positions. We talk about our track record. We talk about our open positions. And we talk about new surge strike trades that we've put on in the last week. And of course, where our fills are looking at and what we're looking at to get out of those trades at as well. So those are a couple things. If you want to be part of this, there's the order form you see here. There's a link on the screen. Read all of this. You'll see everything that you get. And we're offering this a fantastic price right now. All right. My Valentine's Day special, if you want to call it that. But if you're interested, you got the link on the screen. You have questions. There's my VIP team. Feel free to call them. And Eric, we talked about John Deere. We talked about Newmont. We talked about Cbre. I'll get into Newmont and Cbre a little more next week as they go into their setups. All right.
You ready to get into some strategy?
Well, yeah, absolutely.
All right, let's do that. We're going to fade on over. And I believe you're taking us to your charts here. Going to get us into a little bit about what's going on.
Yeah, so the chart setups that I'm watching, let's look at a couple of them here. So AMGN, not AMZN, but Amgen. Okay, so I want to share with you what's kind of happened with Amgen. So Amgen is, and I'll get into this more tomorrow, but there was a surge that you see here. Okay, stock was just kind of puttering along here. And had a move up and then subsequent move down before earnings and then got a big pop. But look at what happened with the surge strike on the way up. That's Amgen. What's interesting, what I find very interesting is even with this big push, all right, the day after the earnings announcement released, we were around $233 and we traded up as high as $245 and closed up here around $241. Since then, we've dropped. We actually dropped past the open of the earnings and we dropped all the way down. And look at this. We filled that gap, and that gap actually filled in about 3 days. All right. There is a post surge strike here on filling gaps. All right. This is something we talk about. We have alerts on these guys. All right. Let me show you Google. So here's Google. Same thing. I've been talking about this. I talked about this last week, and you saw that the pop up in Google and that daily price action where it jumped up and started to fade. Now, there was a big surge into this trade, and then look what happened. The tide rolled out, and Google rolled down, and it took that gap and faded that gap. And again, this one took about 4 days. So a totally different angle in the market, but that's the trade setup we're looking at in this case, right? Are there any more? I didn't go into FANG at the beginning, but let's just jump over and take a look one more time. Now, Facebook is not doing what Amgen did and what Google did. It's doing something called a runaway gap, right? Where it's not filling the gap, it's actually running away from this gap. And you can see here, Facebook made that drop. But since then, it's just been continuing to get more and more ugly. And so as I look at that, that's the first thing that I look at's on my mind is it a gap that's exhausting, meaning pulling back, or is it a runaway gap? Apple didn't have a gap. Really no gap in Apple after its earnings event. Amazon did have a gap. And again, there are certain ones that we see where it just doesn't want to move up or down, and Amazon is not in a runaway or an exhaustion gap at all. Netflix, what do you see here? Well, it tried to exhaust back up to the gap, but now it looks like it wants to jump back into being on the bearish side and running away from the gap. We looked at Google. How about Tesla? Tesla is a no gap trade. So there are certain opportunities that we can look at after earnings. And I'm going to go through those actual rules step by step tomorrow when we discuss the after event, all right, after event trigger or after event triggers that we have going on. So, Eric, you know what? Let's go ahead and jump into some chart requests.
Yes.
And see what the folks out there. I'm sure you've got some stuff out there that people want to look at, and I'm going to look at them a little. Because it's Tuesday and we're looking at earnings. We'll look first to see if there's a surge strike potentially coming, or if it's already behind us and what to expect. So take it away.
Yeah, I've gotten a few. I want to grab more, and they're already coming through the chat, which is great. But this one came in a few minutes ago. Tom, please talk about FOXA puts.
FOXA puts. Well, let's look at FOXA first.
Sounds like a plan.
FOXA, that's FOXA. More importantly, 21st century. Take a look here. You can see that the stock had run through earnings and ran up. Now, what is it looking to do? Right? It looks like it wanted to move higher, but now we're kind of getting back into the range. Now, when I look at put options on this, there's two things I can see. The put options that were how much they were trading at before the earnings came out, and then where they're trading at afterwards. So you're seeing something was trading up here in the high 40s in volatility that dropped down in the low 30s very, very quickly. The puts, which were expensive last week, have become cheap this week. So if you believe that 21st century is a bearish opportunity, it's better now to buy the puts than it was a week ago because you're getting them on sale. Now, let's go ahead and take that. I can take this one step further too. So if we go into an option, a stock and option table for FOXA, and so for that, I'm going to need to come over here and type in FOXA, and let's update that. And then let's just update also, and I can show you where these were before and after earnings. So last week, the February 18th, let's look at the Feb 18 options. And let's look at those at the monies. Those at the money calls and at the money puts. Let's look at the at the money puts. So you can see, here's your stock price, Eric. Here's the puts. And you can see what was going on, but this is the most important chart of all. This is the IV chart. See that implied volatility climbing? That is for the actual put that we're looking at right now, right? Which in this case is that 40 strike. Now I can go back to FOXA. And now let's run forward. Let's update to today's date, the 15th. We're still going to look at those same Feb 18 options. I want to see what those look like now because volatility's dropped. And now if you look at the put options, and these are the at the monies, look how cheap they are. They're down here at 43 cents. And the reason why? Well, because what was going up has dropped, is now gone down. All right, Eric, what else you got on the list there?
We have You Don't Know Me who wants to check out ASO.
ASO. And remember, the stocks that I look at, they've got to have some sort of an option that trade along with them. Otherwise, I just simply don't look at them and I don't trade them. But as you can see here, Academy Sports and Outdoors, there's an earnings report coming up for it in 42 days. If I were to take this from a 30-day chart to a 90-day chart, let's just see if there was a surge last time we came into earnings. And what it looks like is this. So this one was running up as, we started to move up when we peaked. Then we had a pretty stiff drop from $51 down to $41, and that pushed the IV from 60 up to 95. We did get a little bit of a pullback in IV and a little small move up before the earnings came out. So there really was no surge in ASO. What's going on with ASO right now? Double bottom is forming. This 42 days, I would look at this when it got down to about 2 weeks before earnings. See where your volatility is then, because it might make a very interesting surge play to the upside, being that last time we were coming into earnings, at least for the week, we got a little bit of a move price-wise. So what I'd be looking for is a price move to the upside and an IV move to the upside for ASO. All right, Eric, who's next on the list?
Next, we have Denny from New York looking to have a peek at Coin.
Coinbase up another, that one I get up 5%, down 5% all the time. I get more stuff on Coinbase on notifications on my phone than probably any other stock.
I get the same.
It's up 5% today. So you can see Coinbase is up. This is almost a pure play on Bitcoin. They do have earnings coming out in 9 days. So there is going to be a little bit of a shift for a small time frame, and you're going to see Coinbase shift from not so much about Bitcoin, but more importantly about their earnings. I don't expect that to happen until next week. This is one of those ones that really starts focusing on earnings the week the earnings come out. So their earnings are estimated to come out on the 24th. I'd be looking at this next week as an earnings play. Look at the surge on this thing. I mean, it's extreme. Now, what's interesting was this surge came while Bitcoin was moving higher too. So you got the double whammy there with Coinbase. Last time Coinbase even saw anything north of 350 was the last time we saw earnings. 50% drop, getting a little bit of a move here. If you believe in Bitcoin and you believe Coinbase is going to show something at or above expectations, then this looks like a potential short-term buy. Hey, Eric, let me turn to our YouTube community.
Sounds good.
Because ZM is on the radar, and Alex is asking about ZM. So let's take a look at Zoom. This is one of those stay-at-home stocks that now nobody wants to stay at home anymore, and you can see by the drop in the price. I mean, just since last November, we went from $290 a share down to around $140. This one's now 50% off too. Looks like a sale at Walmart. Now, what's going on with Zoom is almost the same thing with what's happening with Coinbase. What I mean is this, not that Zoom has anything to do with Bitcoin, but Zoom has earnings in 13 days. And as we get closer to next week, you're going to start to see this volatility area. We get above this 85. If it jumps above 85, it starts to move north, this red line, then I know the earnings surge is in play. All right. The question is, do you want to play it to the upside or the downside? It almost looks like there's going to be a relief rally before the earnings cycle comes out. My only thought about Zoom is whether or not those options are expensive. So let's go ahead and look at option charts for ZM. I'm going to go back to options, and I'm going to look at the option chains. I want to see what these ZM options are trading for. And so I can do this, and I can look at let's go out there to today's date. Let's look at those, not the Feb 18s, all right, not even the Feb 25s, because remember, Zoom reports on the 28th. You got to look at the March options. Those are going to have the earnings data built into them. And so here you go, at the money calls, $12.18. Not cheap by any means, but cheaper than they will be this time next week, at least on a volatility standpoint. I don't know where price is going to be on Zoom next week, all right? Or more importantly, on the 28th when they release their earnings. But we have a pretty good idea that implied volatility, that option traders are going to come back into this trade, and we're going to see that surge come in for Zoom, and potentially that $12.18 call could be worth a little bit more here in the coming days. All right, Eric?
Yeah, we have Cats looking at HAL.
Halliburton. Well, they certainly had some great moves thanks to the price of oil and energy. As you can see, Halliburton double bottomed down here around $21 a share. I can't believe Halliburton was this cheap at one time. And here we are now up in the 30s. You can see Halliburton in the 30s and actually having a great reaction, coming, making that short-term bottom this morning, but then coming back up, and it's actually even on the day. That's quite surprising. Halliburton doesn't have earnings for another 64 days, so it's not an earnings surge we're looking at. In fact, the surge already came. You can see the surge that happened here as the IV went from the low 40s to the low 50s before that earnings report came out for Halliburton. Right now, if I were to look at Halliburton and turn the page, we're in a seasonally bullish pattern now for oil and oil stocks. So Halliburton really is going to get the wind is going to be at Halliburton's back now for the next several months. So that's what I have for Halliburton. Let's go back over to our folks over at YouTube, and let's take a look at MTTR, right? Did I get that symbol right? I did. That's Matterport. Matterport has had a Matter drop. All right. So for P-Man, you want to take a look at this piece. Matterpoint has dropped off quite a bit here, and you can see that this one has earnings coming out in a day. Now, it has baselined over here at $8, and you do see the surge going up. And I mean, we went from, take a look at this, Eric. This was 130. It was expensive a week ago, but look at it now. It's approaching 230. And so that makes me, I have to go look at this, Eric. I got to do some more detail in this.
That's fine with me.
I kind of think I know. Yeah, I kind of think I know what's going on with Matterport, but I'm going to let the option tables tell me. MTTR. And we're looking at today, and we're looking at February 18th. I mean, was I right that we were only one day from earnings? Yeah, I mean, this isn't something you want to jump into today. It just isn't going to happen. But I'm curious. Those $8 puts, wow, even look at this, even the 750 call is 95 by 98. That's insane. Excuse me. Look at the puts, 35 by 40, insane. I mean, look at the IVs, 211 by 231. The 10 puts. Now, this is still going to be, is still 2 points in the money, or almost 2 points in the money, and yet the implied volatility is at 250. That's huge. All right. If you like this to the upside, if you really like this to the upside, to me, a one-day option ain't going to cut it. You're going to have to want to go out a little bit farther, but too pricey for me. Really, if you like this one, the stock makes the most sense. And there's a question on the YouTube channel, where can I get information on Brutus and the Surge Strike? And I'm going to drop in real quick the order form that those of you that are on YouTube can take a look at here. So click on that link that I just put in the chat box if you're interested in learning more about Brutus and learning more about Operation Surge Strike. Eric, any more Q&A, any more stocks that we want to take a look at here?
I think we have time for a couple more before we get into your top pick for the day. But how about Clarence looking to look at CCL?
CCL, that sounds like Carnival Cruise Lines. And let's go take a look at CCL. And here's CCL right here. Earnings are in 50 days. So no surge is going to happen with this one. The only surge that could happen on Carnival is a rogue wave hitting one of their ships, and that would not be good. All right. But if you look at what happened last time we had earnings and then back yourself off, it was really a lot of up and down. There was no trend after earnings. There doesn't seem to be much of one now, although we are hitting some resistance right above the $23 mark. Right, $23 mark. We get that 25, and then we're off to the races over the last several months. But the 1 year high we're on, or excuse me, this year's high, not the 1 year high. This year's high on Carnival Cruise Line. We're getting close to stabbing that here really soon. All right.
Hey, Tom, let me hop in here for a second because I see Gabe talking to the chat. He's the one that you're going to call on the line if you want to get in touch. But another way to get in touch if you want to be part of these back rooms and the services, you could just type in the chat, trade with Tom, and someone from our staff will reach out to you via a direct message. So it's another way, easy way just to get in contact with someone if you're not ready to jump on a phone call or something, just for some more information. So check it out with Gabe. Trade with Tom.
Absolutely. And wow. Okay. So we're getting down to being close to out of time here. And so, we've been talking about surge strikes. We've been talking about trigger events. I gave you several different names to look at. Tomorrow, what I'm going to discuss, even though I still got a few minutes because I'm setting this up for a trade opportunity today. But tomorrow, I'm going to talk about after surge events. But I want to share with you an after surge event that actually happened a few days ago, several days ago, actually. But I think we could see some continued movement on this one. All right. Now, let me set this up for everybody, Eric. Take a look at, and this is not it, so don't go running in and saying, "Ooh, Tom's got a trade on the SPY." No, I don't. All right, but I want to show you what's going on with SPY, and I want to talk about the last 20 trading days. That's pretty much a month. You can see here, SPY has had its move down, it's had its move up. It's hitting resistance levels here since the middle of January, right around the 457.5 area. We had a drop down. We gapped higher right? We have a gap higher. We are not running towards the gap. We are running away from the gap of today. Now, when you look at that, think about this, all right? Dow's up 300 and almost 350 points. S&P's up almost 50 points today, and the NASDAQ is still up over 1.5%. It's up over 200 points. So although they've come back a little bit, they're still, you know, as we head into the middle of the lunch hour, you can still see this thing is on the move up. So when I look at that, and then I go look at Facebook, Meta, which I talked about earlier, this is terrible. This is absolutely terrible when you see the overall averages, and more importantly, the NASDAQ up 1.5%, and you got Facebook down almost 1%, and Facebook is just ever so slightly clinging to this area here. It's like it's got its fingertips, all right? Its fingertips right now are holding on to the cliff, which is what we like to call 218, all right, 217.29, that area there. So if it drops off that cliff, we could see the stock dropping down to the 200 level. How do you trade this after surge? And this is an after surge that happened over a week ago. All right, that surge to get out, the fear. We had FOMO or FOGO, fear of getting out. All right, at a good price. And so FOGO took this down even more. So here you've got now, which is more trending down. So in this case, let's go take a look at some options, and let's take a look and see what can be had, not by Friday, not by the end of February, but really looking out there around March 18th. All right, so March 18th, and we're looking at a potential 10% down move. Right? If you're looking at the 215s as a potential trade, here's an idea. What about, now we're going to go a little bit farther out, all right, which means we could look at the 215 puts. Those are out of the money. They're trading for $9.55. They're not cheap. So we're going to have to serve this up and do it a little differently by selling the 205 puts against the puts that we buy. So buying the 215s, selling the 205s. This is one example. It's not a recommendation, but it's a trade idea for you. And you're looking at what's called a bear put spread. A bear put spread allows us to profit in a down move, but do so with a lot less risk than simply going out there and buying a put. If you bought the put, you'd be paying over 9.5 points for the put. But by putting this together, we have taken off nearly 2/3 of the cost and the risk, because right now you can do this one for around $3.65. Which is significantly less than $9.55 just buying the 215 put. Also, which drops is if you had the 215 put and you had that for $9.55, you know where the stock has to go? It has to go to 205.50 by March just to break even. By putting this put spread on, you know what happens at 205.50? You're very close to max reward, which in this case is over 170%. Right, so that's why I like this put spread. And also, if you take a look at what's going on with Facebook too, and we saw that. You saw that drop down, and now it's going slowly down. So if you're going to trade something to the downside that's moving slower down, you got a risk of a pop. Well, guess what? $3.65 is a lot less to lose than $9.55. But if this thing continues to dribble down like it is, all right, this, in my mind, is the best potential reward to risk trade that you could do on Meta platforms right now. And Eric, with that ends the show today. So guys, if you want to come back and join me at 1 o'clock, if you're part of Operation Surge Strike, I will be joined by my special guest who shows up every single week with us. We will get into everything Surge Strike. If you're not part of Operation Surge Strike and you want to join, you got the order form there to join with. If you have questions, contact Gabe and his team so we can get you started at 1 p.m. You can join us at 1 p.m. Otherwise, guys, I'll see you back here again tomorrow, 11:30, same time, same channel, although we're going to take a different approach to Surge Strike. We'll see everybody then. Bye, everyone.